Hi there, traders. This is Brad Gilbert with the FX Market Insight for Thursday, the 21st of November. All right, now as we come into Thursday's trading, you're usually getting pretty excited, right? Usually there's some key fundamental data coming out, currencies have direction, and we're ready to go. What we got at the moment is very frustrating markets. Obviously, the geopolitical events really dominating. You'll see every day, basically, something about Brexit, something about the US-China trade deal, and also Trump's impeachment proceedings. Now, the Trump impeachment process, it's a little bit slow, but you know what? It can gather steam pretty quickly. As I've been stating for some time, Trump it's in his best interest to make sure there's no China-US deal. If he can sort of create some sort of hysteria or war sort of situation there, as in like a trade war, then it could deflect some of the pressure on him at home over this impeachment process, which to me looks like it's a foregone conclusion. He's definitely been playing up. But we have to wait and see how that plays out. Now, just coming back to look at the analysis, what does that do for us? Well, you know what? It doesn't do anything. Okay, I'll just give you a look at around the grounds and look at the charts in a second. But look at the overall analysis. Dollar CAD is the one pair that's really kicked into gear. It's broken through short-term resistance. So the hourlies and dailies now sort of breaking to the top side. It's on its lonesome at the moment. Kiwi, long-term chart still down, but you know what? All these red little bars here tell you that the trend lines we've got at the moment are very weak. Okay, and that's what's been happening. It's just the currencies have just been hardly moving at all, or just moving through weak trend lines, and no one's really partaking in that. Now, let me just have a look, give you a look at the charts as we come into the main part of your analysis, technical analysis. So, just having a look here, the Aussie. Has really been diffused. It's sort of back in the range, just sort of trading in a 30, 40 point range. Kiwis managed to sort of hang on to some recent gains, but doesn't look like it's going to go too far. Dollar yen now sort of formed a bit of a base around 108.30, sort of just gliding sideways, as is, we've seen that little bit of weakness in the US dollar, and now euro just sitting around 110.70, hanging on to its recent gains. And, you know, Brexit, well, Sterling's just dribbled through that trend line, but not with any sort of major conviction that you get hold of. As I mentioned, dollar CAD, if anything, it looks pretty good. Like, it has shot to the top side. It's come back, retested that previous resistance, which is now support, and we are up here in the middle of pretty much nowhere. But you know what? It is the one pair that's breaking higher. Now that's where we are with the charts, right? I'm not jumping up and down, as you can tell by the way I'm sort of going through this. It is a bit of a frustrating phase, but it's all about the process and the routine, right? You stick to this and you will get the opportunities when they pop up. Now, I did mention this on Monday. So once we get through Wednesday, if you look at all the data, it's all pretty much euro related, euro, the dollar. So euro is going to come into play here. We've got the monetary policy meeting accounts, Philly Fed, manufacturing, consumer confidence today, and then you've got a few more Eurozone releases tomorrow with the CAD retail sales closing out the week. So to me, you know what, it's Euro's trading mid-range. It's all going to come down to this data, I think. That's all we can do. When you're looking at the overall dollar picture, the dollar index, yeah, we had that little bit of weakness as the Trump impeachment proceedings were going along, slightly variable data, but now it's back to trading sideways. An interesting one here, dollar one, I've just got like a trend channel here on dollar one, sort of slightly moving back to the top side. So, you know what, there's a bit of euphoria over a potential deal around here that sort of pushed the one up, you know, the dollar down, and now we're seeing that slowly unwind again. So I don't know where this US-China situation is and who's trading it, but it's all a guess at the moment. Equity markets, just keep an eye on these, okay? It's a sea of red at the moment. It's a risk-off scenario. So that could see Aussie Kiwi drift lower. We aren't really seeing it at the moment. But if we see the equity markets have a couple of big, I wouldn't say this is big, like 0.4, 0.6%. But if we have a couple of big negative days, that can start to be the direction that traders will look for, especially in that North American session as these Trump news comes out. Keep an eye on the equities. That's where the probably direction is going to come from. And it's going to be to do with the risk-on, risk-off scenario, and you'll work out which pairs you should be trading. All right, guys, that's pretty much it for me. Bit of a roundup. Just take it easy, relax, wait for the opportunities to build. If it's not today, it'll be tomorrow. If it's not tomorrow, it's next week. All right. Hang in there. Good times. Once we get rid of Donald and Brexit, these are going to open up. All right, guys, take it easy. Have a good trade day. Cheerio.